Greetings, salutations, three Vita Defas. However you say it in your neck of the woods, I'd like to welcome you to another episode of The Art of Reading Price Action. Again, I'd like to welcome you to another episode of The Art of Reading Price Action. And in this episode of The Art of Reading Price Action, we will be talking about how to study price action. And not only talking about how to study price action, we're going to be talking about how to study price action using the ICT concepts. Now, this is a special episode, a special insert, Fraggle, if you will. For those who don't know what a Fraggle is, that's when you adjust the op order in the military. Anyway, a Fraggle, if you will. This wasn't a planned part of the series, but I felt like this is something that's needed because the mentees had been talking to me. And so I said, you know what? I'm going to do a video based on how to study price action using the ICT concepts. Because when people tell you to do, hey, just go back test. Just go study it. They never tell you how. So you're just fumbling in the dark. And that's my job as a mentor, to help you not fumble in the dark. Now, speaking of mentee, if you desire to be a part of the paid mentorship, there is a join button here somewhere on the tube. I do it all through YouTube. I have nothing to do with signing you up or taking you out. It's all by you. You click the join button, you sign up, you pick the tier that says mentee, then you go over to Discord and join the Discord. The Discord link is in the member section. You accept that membership, you will be in the Discord, you will be a part of the gang here on YouTube, and that's how you sign up. It's $24.99 per month for those who have been asking me. Now, without further ado, let us get into another episode of The Art of Reading Price Action. How to study price using the ICT concepts, right? Yep, that's the same picture from the last time. I just didn't change it. I changed the title. Sue me. But how to study price action using the ICT concepts. Now, you want to study price starting from the top down. TDA stands for top-down analysis. You always want to start studying. You don't want to start studying price from the lower time frames. The top-down analysis approach is the best way to study price. I don't care what trading strategy you use, but you want to start on a higher time frame and work your way down. These are the time frames in which I study price. The monthly, the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, the 5 minute, and the 1 minute. Those are the price jumps, if you will, the time frame jumps that I use. Now, and everybody knows I like watching it on these time frames, but I like trading with the 2 time frame difference technique. I call it the 2 time frames down. So if my higher time frame that I'm looking at is a weekly, I like to make my trading entries on a 4 hour. If my higher time frame that I'm watching is a hour, I make my trading decisions on a 5 minute. If it's a 15 minute time frame I'm watching, I make my trading decisions on the 1 minute. So the 2 time frame down technique is how I like to trade and watch how price plays out. But I look at all the time frames to see what PD arrays are present, so I know if it's a 4 hour PD array, then I'm looking at what the 15 minute is doing in reference to that 4 hour PD array. Now, you want to study price starting at the higher time frame, 1 candle at a time. Right? Tim, what is 1 candle gonna do for me? Because when you're on the higher time frames, like a monthly, that 1 candle encompasses probably 30 days. So there's a lot of information in just 1 candle. So you want to start out by studying price by just highlighting an entire range for just 1 monthly candle from the high to the low. And then with TradingView, I just extend it over to the next candle, and that will give you, it'll highlight the range of everything inside that candle. Because on TradingView, when you mark something, it starts at the beginning of that candle. So if you go from this candle to that candle, that encompasses the beginning to the end of this one candle right here, that one red candle right there, if you can't see the bouncing ball, and you should be able to see it. Now, you want to highlight the entire range of a month, one monthly candle. Just pick any month, highlight the range. Then you want to mark out the high. Then you want to mark out the low. That creates your box. Right? The high of the monthly candle and the low of the month, that's your largest box that you're going to have. If you don't know about my box analogy, look at the last video. I talked about it in there. So you got your box. That's the biggest box that you have, the monthly box, right? Then you want to annotate any PD arrays that this candle touches on that time frame. So for example, this down close candle here, the red one that I highlighted, it touches this imbalance, this fair value gap right here. So since it touches that, I'm highlighting that fair value gap. And notice I stretched it over to the beginning of the next candle. Why? Because that's going to cover the entire range of this candle. It'll make sense as we drop down. So the blue shaded area is going to show me when I drop down in time frames, because I'm going back through data and I'm looking. This blue shaded area is going to say this is the price in that time frame that I want to focus on. The highlight is just to draw my attention to that area. And then this fair value gap, it interacted with that. So I want to see how price on the lower time frames interacted with this monthly fair value gap when I start to drop down. That's why you want to annotate any PD arrays that the candle comes in contact with on the same time frame. Now, and then you will repeat the above, all these steps here on the weekly and daily time frames. Now, when it comes to the box theory, I don't make boxes lower than the daily. I just make it because the higher time frame is what drives the narrative. Now, on the weekly, right? Now, this is where it starts to get sticky. On the weekly, right? You want to highlight, in this case, I'm highlighting the second week just for clarity. But when you're doing it, you're going to start with the first week. Now, every month is going to have 4 or 5 weeks in it. So in this month, this is the blue shaded area for that monthly candle. And so we got week 1, week 2, week 3, and week 4. Those are the 4 weeks inside of that month. When you come to the weekly time frame, you're going to start with week 1. But I highlighted week 2 because week 1, the high of week 1 was the same high as the month. And I didn't want to have any confusion. I want you to be able to visually see what I'm doing. So I highlight week, that week is the second week, right? I mark out the high and I mark out the low, right? That creates a box inside your monthly box. So this is the weekly box from that high to that's the box top, that's the box bottom, and this box is inside the monthly box. Anything above, external liquidity, anything below, external liquidity, anything inside, internal liquidity. So now you got a box inside of a box, right? Now you want to do this for each week, 1 week at a time, right? And it's going to be 4 or 5 different boxes, typically 4 boxes inside it, but you're going to do week 1, right? And when you do week 1, you're going to drill down to the daily, and you're going to do all 5 days separately as you're studying price. So in this case, we're on week 2. So here we are, we've made it to week 2. Okay, we annotate in week 2 because in week 1, we've already highlighted week 1 and studied price on Monday down to the lowest time frame, studied price on Tuesday down to the lowest time frame, Wednesday, Thursday, and Friday. And once we did all that, now we've moved on to week 2. And now we've highlighted week 2 and annotated the high and the low. And if there was any PD arrays that we wanted to annotate, right now, I'm not annotating anything because there's no imbalances that this candle is coming down into, right? This over here, we would have annotated this small BISI right there, but that's already passed. So this one here, we don't have anything that we really want to annotate. If you wanted to You can annotate the order block here, but I try to focus on imbalances and liquidity. That's my thing. But any PD arrays that it come in contact with that is a part of your trading strategy, you want to highlight it to see how it interacts with it. Now, you got that, beat that horse enough. This is a daily time frame. In this case, I've highlighted Monday, the first day. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. These are the 5 days within that weekly box, right? There's the weekly box top, the weekly box bottom, and then I've highlighted Monday. That's the top of Monday and the bottom of Monday. So for every month, you would go and highlight week 1 and do study Monday, Tuesday, Wednesday, Thursday, and Friday, all on the intraday time frames, and then move to week 2 and study Monday, Tuesday, Wednesday, Thursday, and Friday, all on the intraday time frames, and then move to week 3 and study Monday, Tuesday, Wednesday, Thursday, Friday, all on the intraday time frames, then move to week 4 and study Monday, Tuesday, Wednesday, Thursday, Friday, and then your month will be done. And that's how you go through with the boxes. And each time on the daily, you're just creating a new daily box, but your monthly is not changing. And once you finish your week, then your week will change, but your month will not change. And when you finish week 2, then your week will change again, but your month will not change. Then when you finish with week 3, then your week will change again, but your month will not change for the box theory. Now, time and price. Now, on the intraday time frames, this is where the magic happens. Yes, it is. On the intraday time frames is when you're really going to start to study the price action. And while you're studying the price actions, these are some of the questions you want to ask yourself. This is not everything in totality, but these are some of the questions that will help guide you in the way of studying ICT concepts. And don't worry, we're going to jump over to the charts and discuss some of it after I give you your homework. Now, what's some of the questions you want to ask yourself? What time are PD arrays formed? Meaning, we're on the intraday charts. So what time of day was this 4-hour SIBI formed? That's something you want to annotate. What time of day was this 4-hour SIBI formed? What time are the PD arrays revisited? What time did it come back into this 4-hour PD array? Time and price. Time is very important. Time is more important than the price, right? What time did price consolidate? What time of day was it when we just did this consolidation over here? Or did it consolidate all day, right? It's important because a day is a part of a week. So if it consolidated all day, okay, it consolidated all this time, and then we went up and we went, yeah, it's a part of the week, time and price. So on Monday and Tuesday, it did this. Wednesday, it did that. Thursday, it did that. Friday, it did time and price. What time of day did it do it? You get it. What time did it displace? Hey, this is displacement. What time of day was that when it displaced? What time did price manipulate the lower high? It wicked this out and then it dropped, or it wicked that out and then it dropped. What time did it do that Judas swing? When was that? When did it manipulate the higher low and then reverse the other way? Right? What PD array did price trade back to? Or when it traded down, what did it trade back to over here? Right? What time did it okay, it traded here, we traded back up at, let's just say we traded up in the New York AM. We traded back up into a SIBI that we created in the New York AM, or a SIBI that we created in the New York PM, or we traded back up in the New York AM. This BISI was created in the AM. You look as far left as needed to get the correct confluence. We cut through candles. So if you're looking for the confluence and you know it is we're displacing or we're manipulating in the New York PM, and then you look to the left and you see a SIBI that was created in the New York PM, then you know price is reacting to that SIBI over there. Or it could be the New York AM. But if price is bearish, and this is the first time we're trading back up into this SIBI, and then we come back. I'll give an example of that later. Now, time and price. Let's get to the homework, and then we'll get into our examples. Homework. I want you to go back. Just pick a prior homework assignment and redo the assignment using the techniques that I just went through with the box theory, and see if it helps, and see if you want to implement it in your studies. And use the ES June contract on TradingView. It's ESM 2024. Now, with that, let's get into the charts and go through some examples. Okay, here we are on the charts. This is the same. I still got everything on the screen. This is our monthly box. This is the box that we drew out, right? So our monthly box is the blue. Our weekly box is the tannish color. And our daily box is the yellow color, right? So looking at this day here, the hourly chart is giving us some detail, but it's not giving us great detail. But we can still study what the hourly chart is doing. Stretching it out so we can see. So we're studying. We know we're inside the monthly range, and we're inside this day. This is that Monday. So we see on Friday, we traded back up and came into this hourly SIBI over here. So on Friday, we traded up and came into this hourly SIBI. So now here we are starting out Monday, and it's at 6 p.m. And you just go through and study price. You go through and study price. What was done? We created you can look and see, we created a SIBI here at 11 p.m. on the 11 p.m. candle. We created a SIBI on the 11 p.m. candle. Let me hide some of this stuff so it's easier for you to see what's going on. So we're just going to keep the daily box so we'll know what we're looking at. Okay, so we created a SIBI here at 11 p.m. Then price, we just marking out what we got in here. All right, this is our daily high and our daily low from that day. We did not interact with the prior day's high. Okay, this is Friday. We did not touch the prior day's high. This stuff. All right. We did not touch the prior day's high. This is all the stuff that you want to go through and look at. And then this is Friday, 10 p.m., 8 p.m., 34, 4. So this is Friday's low right here. Okay. So that's the prior day's high and low. Just looking at that, annotating that. So as we see, we see this was a small range day, and we were in the premium of that other day's candle. Because if we run a fib on Friday's range, we see that we consolidated in the premium of that prior day. Right? That's an important thing. We were consolidating in the premium of the prior day. Right? So if price is bearish and you start to consolidate in the premium, you can get an idea that, hey, we're engineering liquidity, and we're engineering liquidity to go short. And as you see here, price broke bearish, and we engineered liquidity all the way over until Wednesday morning, where we manipulated that liquidity. We manipulated the buy side that's resting up here. Manipulated and dropped. We manipulated that buy side on the 8 a.m. candle. We pushed up into it, and then we quickly dropped off because price was bearish. We understood that price was bearish by the displacement down. We created imbalances. We created imbalances over here. All right. We traded back up into an imbalance, which was in the premium of this move. If we get our fib tool, go from the lowest low up to the high. All right. We see that we're in the premium of that move. Okay, so we moved back to the premium of that move on that Friday, and then price consolidated all the way until Wednesday. Well, initially we had a fake me out move here where we engineered more liquidity. How do we do that? We consolidated, took that liquidity, broke down, and then went back up and failed to take that high. Very manipulative, consolidated more, and then on Wednesday, finally, boom, took out the buy side, knocking everybody out, and then came back down. Very manipulative right there. Don't fall, but price was consolidating in the premium before continuing down. But this is just a broad view of how price was moving during this time. But you want to go in and look at every little detail about price. It's better to do a daily play-by-play when you're trying to learn, and then once you learn and get a good understanding of it, then you can do a broad sweep of the week like I just did to help save yourself some time. But on the daily, you see we made this SIBI on the 11 o'clock candle, and then we just consolidated all within inside that SIBI. We was trading above it, below it, came back to the top, came down, and then we started to respect it right around the 8 a.m. candle. The wicks do the damage, the bodies tell the story. All of the bodies were staying above the SIBI. We just consolidated above that until the end of the day. All right. Not a whole lot going on the hourly time frame. And if you want to see more detail, you can go down low. Let's just go down to a 5-minute just so we can see more detail. On the 5-minute candle, you can see there are a lot more PD arrays. All right, a lot more PD arrays. And you can come over here and say, okay. At 8 p.m., we created a SIBI. Pull it over. We traded back up into that SIBI at 9:40 p.m. Respected it. Then we traded back down. As we came down, right, we created a SIBI at 8:25. Then we inverted it almost immediately. Created an inversion fair value gap almost immediately on the 8:55 candle. Found support on that inversion fair value gap. Then we created a small BISI on the 9:20 candle, trading back up into the 8, trading back up into the 8 o'clock SIBI. Had respect for it, came down and inverted, made an inversion fair value gap on the BISI from 9:20 almost immediately. Then we consolidated there up into the 11 p.m. candle where we displaced down, creating several SIBIs. You know, just like that. Just go through price and study what price did with each one. Make sure that you annotate when it displaced away. Did it actually come back to a premium in that range? Yes, it did come back to a premium before displacing down. Or did it come back to a discount? Right? If it's bullish, right? You look over here. When you pushed up, yes, price did actually come back down to a discount before extending up. All right. Look at all stuff like that. What time of day did it happen? When it traded back, what did it trade back to? All right. Just remember all kind of stuff like that. Oh, and I did say I was going to give an example of when price comes back to a PD array. So looking at the NQ here, this was an example that I noticed today. Here we are, and we were getting ready to go into the New York PM session, right? Over here in we was getting ready to go into the New York PM session, and price had taken out buy side, and it pushed down, breaking structure. So I said, hey, we look like we're going to push down. Let's see what we can push down to, right? So when you look all the way back over here, if I squeeze price up, you notice, right? Follow the green lines. Right? This right here is the first time price has come back and interacted with that range. We traded up, then we traded back down. So it's the first time we're coming back down to this range all the way over here. Now, what's significant about that? if you look, this is Thursday morning and this is Thursday afternoon, right? So this is Wednesday, New York PM. This is Thursday morning, and then this is Thursday afternoon, meaning New York AM, New York PM. Okay, Wednesday, New York PM, Thursday, New York AM, Wednesday, New York PM. Okay, so in Wednesday, New York AM, we went up and took out buy side. Right, then we came down in going into the PM and had a break in structure. We had a break in structure, so prices showing like a bearishness wanting to pull down. What can we pull down into? We look to the left, right? Yes, we have some information over here from Wednesday, right? Right, this is Wednesday, but this is Wednesday during lunchtime. Okay, so this is Wednesday during lunchtime. This is Wednesday during the PM session, right? So when we look back, right, when we look back over here, coming all the way back over here. Now, right, we have the New York PM, SIBI there. We have a New York AM, BISI here, and we have a New York AM order block here. So we have an order block from New York AM, we have a BISI from New York AM, and we have a SIBI from New York PM. Right. So all this time right here is the New York AM and New York PM. Okay. Coming back over here, remember, BISI, New York AM, order block, New York AM, SIBI, New York PM. Okay, I can do it like this. Here, New York AM, we traded down into the New York AM BISI. New York PM, we traded down into the BISI, right? That's when we made the break-in market structure during the PM, traded down to the BISI, but when we traded down into that BISI, we pushed back up into the order block and traded back down all the way to the low of that order block. What was at the low of that order block over there? Remember what was at the low of that order block? Right here, if we go to toward the low of that order block and put in a ray right there, that is the high of that PM SIBI. Time and price. We cut through candles. You hear Michael saying that all the time. We cut through candles. If you really want to study price, remember time and price. I know that went down the rabbit hole a little bit on some of y'all, but trust me, it works. That brings us to the end of another episode of The Art of Reading Price Action. It's your boy, Timothy Lee Rogers Sr. Hey, I think I forgot to introduce myself again in the beginning. Man, I'm so sorry, y'all. But hey, it's me, Timothy Lee Rogers Sr., a.k.a. Haranya Grande. Until the next time, man, y'all be safe out here in these trading streets. I'm gone, man. Yeah.